Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously, create dozens of quick lists, display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Tuesday, July 21st, 2015. The question bar is open, folks. If ever you have any questions, feel free to ask them. Today on the markets, we have markets that is, American markets right now are starting to have a correction, while yesterday they were going up. So today it's a slight correction that we have on the NASDAQ. Don't forget that tomorrow, actually later tonight, at the closing of after the bell close, Apple will release their earnings. A lot of analysts are bullish on Apple. So far, the stock continues to maintain its upward trend. So depending on how the earnings play out, well, if Apple continues to go up, we might see the NASDAQ that pursues its increase. However, we believe that eventually we're going to have a wave of selling pressure that's going to come on the NASDAQ. Now, for the Dow Jones, the decrease is stronger on the Dow Jones because one thing that happened is that IBM, they released their earnings. They beat estimates. However, revenues are declining. It has been the 13th consecutive quarter in a row that IBM has seen a decline in their sales. So this is something that's kind of negative for IBM. And right now IBM is going down towards its support and it's stabilizing there. So it's only a correction, not a shorting signal, because even if you were shorting IBM right now, look, there's another support that's there at 160. So you don't even have enough potential, right? The stock already lost 6%. And you don't even have 10% before you reach that former support. So the risk-reward ratio is not interesting. Now, for the TSX, it continues to be the index that is lagging its peers. And the thing on the TSX is that, first of all, we had an attempt to start a bullish cycle, not a bullish cycle, sorry, an attempt to have nice day trading opportunities on the gold sector, which had a solid rebound at opening. But what we advise on MarketGurus.tv, that you can have access for free for 10 days, is before considering to open any new position on the gold sector on the upside for day trading, is first of all, you need the sector to make a new high. So to go higher than the top that it reached at opening. It didn't do so. You see, the same thing that happened as well to the energy sector, where since the sector rose, since then the sector has destabilized. And same thing too for the mining sector. So for day trading in the resources today, it has been kind of tough. For instance, if we take a look at the energy sector here, the rebound has been really fragile, and so far the energy sector is losing its upward momentum. Therefore, we're continuing to remain patient. For instance, we have Husky Energy that we recommended as a short on the energy sector, and today Husky Energy made an attempt to start a rebound, finally deflated. If we take a look at the gold sector situation here, gold made an attempt to start a bullish cycle, but so far, not bullish cycle, sorry, a neutral cycle, but we cannot say that this is the point where you should start building up your long position in the gold sector. The thing that we need to have is the confirmation of a bullish divergence. And how could we get that? First of all, the thing that we need to have is, we need to have, let's say, the rebound that goes higher. Sorry, the bullish divergence will be if ever we go lower and lower. Let's say tomorrow we go down while the histogram continues to be higher. So that will be a bullish divergence. So if ever we do have that on the gold sector, then we might say that it's a moment to get into some bullish positions in the gold sector, buy them at the bottom. But as I said also yesterday, is that if you're buying some positions at the bottom on the gold sector, the risk is that we might go lower than this bottom, because if ever the Fed raises interest rate, it's going to be negative on the gold sector. For those of you who follow us who speak French, we actually publish an article on the gold sector today on our Facebook page. I advise you to actually take a look at the sector. It lays out the strategy and also the targets that we have on the gold sector. If for instance, as a technical target for the gold sector, just by putting a Fibonacci retracement from that top to that bottom, we see those are the first target, 137, 148, and around 157 towards that former resistance. But it's going to take a lot of time before we reach that point on the gold sector. So far, it's not a go on the gold sector. You do not have a bullish divergence because the histogram, so far, it's not in a situation where we have this confirmation of that technical pattern. When we will have that bullish divergence, we will give you the go and say, okay, you can start building up a long position on the gold sector. In the next segment, folks, we're going to take a look also at a particular sector that is bringing the American indices really down, but also as well the TSX down. It's the industrial sector. On MarketGurus.tv, we have published a list with several breakdowns on the industrial sector. So welcome back, folks. So let's take a look here. On the industrial sector today, we had two earnings. First of all, we had earnings from Canadian National Railway. This company here, they did well. They beat estimates. Revenue increased by 0.30%. As for CP, it's a different scenario. The company was lower than estimates by 3 cents, $2.45 compared to $2.48, and revenues decreased by 1.8%. Now for CP, look, I know that last week we said that on MarketGurus.tv, and I also said on that show that it was a great timing to start to build up your position on CP, your long position, because it was an interesting bottom, right? Now I think that this slight breakdown that we're seeing right now, it's not a moment to panic yet because it's on its earnings, so it might be short-lived. And I think you need, if you bought CP, let's say here, if ever CP goes below 190, then you will close your positions on CP. But it was the risk that you had to face by buying some positions on CP at this bottom, because usually when you buy some stocks at the bottom, and we said that you need to have a medium to long-term horizon, you have to be willing to tolerate a slight decrease slightly below the support there. And this is why on CP, I think that 190 will represent the point where the situation will totally change, because at 190 though, all this upward trend since 2012 will be reversed, and that will be a totally different technical situation on a stock like CP. So far, it's a hold on that stock. Now, let's take a look here. There's not a lot of nice short opportunity, but I'm going to show you some here. Forget it. ACHN is rebounding. Ariad Pharmaceuticals, well, not so bad for that stock. 758 could be the target, but yeah, not so bad. Not so bad. Mediaviation, also another short opportunity. A buyback order 115, but there's a downward corridor there, so you have a target towards what, 100? Yes, yeah, I'm not sure you have a 10% there. Raytheon was one of the best so far, clearly breaking down, and it's also in the industrial sector. And in the industrial sector in the US, we have several breakdowns. I'm not going to show you all the breakdowns though. As I said, you can make the free trial of MarketGurus.tv, but among the numerous breakdowns, first of all, I would just want to mention that Joy Global has been our analyst choice on MarketGurus.tv since here. We have been able to take 2 rounds of profit on that stock. Right now, we're letting that position go further down. Around $28, it's going to be the point where we're going to trigger to close totally that short position, because we would have made a nice downside ride. Now, as for the new breakdowns, there's Textron, not that one here, but Rockwell Collins, a clear breakdown, because look, it's clearly getting out of a clear downward corridor, so it's a clear breakdown on that stock. Raytheon, one of the best, and Rockwell Automation, also another breakdown. However, in Rockwell Automation, be aware that there's still that upward trend that is there, so this breakdown will just be an opportunity for maybe getting it at a cheaper price towards 117.50. Now, Anon, why HVU does not move with Dow that's going down bigly? Well, HVU, it all depends on how investors are buying some puts. So far, I think with the earning seasons that have started, investors have not been that disappointed. Yes, revenues have decreased, but most of those companies, big caps, have posted earnings better than estimates. So I think there's not as much fear. The deal that has been done also in Greece, where Greece started to pay the ECB, pay the IMF, Greek banks have started to open. So we don't have really a lot of fear on the market. So it's kind of normal that even if the Dow Jones today is taking a big hit, that HVU, which represents actually the number of puts that people are buying, is not surging as much. So far, it's still an ETF that we have in our analyst shares portfolio. Therefore, it rose slightly today, but we're still willing to be patient, because whenever a correction is going to happen on the markets, whenever there's a wave of sellers that's going to come in, because the market will be either too overbought or people will start to taking some profit after the earnings seasons, well, then HVU might perform well. But so far, it's staying flat, staying neutral, and I think that with the fact that there's no big fears on the market, it's also an explanation why HVU is not going up as much when the Dow Jones is actually not going down, and when the SPY also is not going down as much. So it's kind of normal. Now, VLTC, I'm going to take your question in the next segment.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above.
So let's take Anon questions. Anon has a question on VLTC. So what price should we buy? Well, first of all, Anon, look at VLTC. Here we have a stock that has been explosive in the past, but right now the wave of sellers or the buyer's momentum is fading. Weakening volume, right? Volumes are declining. Overbought stochastics. Now the thing is with VLTC is that the 10-day, which is in red, is still above the 30-day, which is in orange, which is a good thing. However, I think that around this point, 7.6, 7.70, 7.50, 6.71, that is going to be a point that's going to be critical to see, can VLTC stay above that. I think if it can stay above 6.77, 7.50, that's a point where we could say that the stock is becoming more and more solid, and that could become a new support. 6.50, 7.50 on a stock like VLTC. Now, where could you buy it? I think I will definitely limit myself to day trading on a stock like that, but I doubt that we could have this buyer's momentum, because we have weakening volume, weakening histogram, overbought stochastic, so I don't see a wave of buyers that's consistent enough. Now, for day trading, those are clear. You have to put that chart here, and you see that the first entry point on the break of that first resistance at 821, target 872, which is that former resistance, and if it goes above 872, next target becomes 915. So $8.27 first entry point, $8.75 first profit taking opportunity, and from 875 to 915, this is the next target for a stock like VLTC. But I doubt it could do so right now because, as I said, with the overbought stochastics, weakening volume of the histogram, and the volume range of that stock, I think that stock is more likely to start to form a base towards 650, 750 on a VLTC. But it's a stock that is worth to watch because it is one of the most active stocks on the NASDAQ recently. Now, would you buy HSD today? Well, you're buying HSD today, which is a bearish ETF on the SPY. So it's the equivalent of SPXU. Look, you're buying it at the, yeah, it's 200% actually of the SPY bearish momentum. So it could pay off, but the thing is, look, you have to get out below 884. Would I buy it today? Well, on this rebound, I see weakening volume. So I don't know if it's the appropriate timing to buy a full position. But really, when we say that we have a bearish view on the market and we're continuing to hold on to our bearish ETF that we have recommended in our analyst choice portfolio on marketgurus.tv, is that we have really some sort of a short to medium term horizon. So the decrease might not happen now, but it will happen eventually. So buying HSD today, I think, technically speaking, forgetting the volume, you're in the right situation though, because we could actually have a bottom there, right? We're testing the low of a downward corridor. The thing is that your exit point will not be too far away, and I think that I would not go in with a full position. I would maybe go in gradually on an ETF like HSD. And why I'm saying that is because we still maintain a view where we believe that the markets are going to have a correction eventually, because the NASDAQ is overbought. So far, earnings are okay, but a lot of companies have a decrease in revenues. And so far, for me, those are all some reasons why we could actually see some weakness on the markets in the coming weeks. And this is why I think that HSD could be an interesting entry point today, right? It does represent one today, but with a gradual position, not a full position. It's important. And also monitor that pretty quickly. Monitor that every day also as well, simply because if ever we go lower and lower than this downward corridor and we have a clear bullish momentum on the market, well, you're going to have to get out on HSD. So far, we continue to hold on to most of our bearish ETF, and therefore, I think that to build up your position on HSD is a great timing to do so. Now, as for CBLI, you bought CBLI at 401. So with a 3-minute period. Okay, so let's put 3 minutes on that. So you bought at 401. Oh, great entry point. You know, you got in really great, Chris. You got in here because we had a second uptick. And where did you put your exit point? 385. Perfect. I have nothing to say. Great job. A great entry point. 385 as your exit point. Great job there. Now, how far could it go? It will all depend, though. Because yes, that's a stock that can be explosive. The thing is that we see that the histogram is starting to be into positive territory. It's tough to tell because right now stochastics is nice. I don't know if it could reach $5, but you got it at the great point. I think maintain your 385 as an exit point. If ever today you're not making a 5 or 6% compared to the price that you paid, I might wait for it. I might hold it overnight, but tomorrow I'll be quick to take some profit. But on that stock, make sure that you quickly take some profit on it because it can also have negative. You can also have negative surprises on a stock like that. So this is why I think that you should also remain cautious. But great entry point. Maintain your exit point on that stock. If you don't make 5% overnight or during the day, hold on to it overnight and watch it tomorrow. Because whenever you make a 5 or 6%, take some profit. But great job. Now, as for the best day trade of the day, it's that stock here, a stock in the energy sector, a stock that stood out throughout the day. One entry point here, another one there, another one there. So 3 entry points on that stock, a surge of 44%. Now it's over because the stock has already reached its downward trend. So you had to get in at opening on that stock. It was recommended since opening on marketgurus.tv. So that has been our day trade of the day. Right now, I think the momentum is kind of over on that stock. Now, folks, overall, we have the industrial sector where we have the most of the weakness on the market. Concerning gold, even if with today's rebound, we cannot believe that it's a timing to get into the gold sector because we do not have the confirmation of a bullish divergence that will allow us to say that, okay, let's build up our position. And elsewhere, folks, I think right now in the markets, it's still a situation where if you did have some bearish ETF, you should not panic to close them. So far, we're continuing to hold on to most of our positions and are not rushing to close neither our short positions, neither our bullish position on the market. So see you tomorrow at 12:30 on the Swing Trading Show on DecisionPlus.com.